China property builders Woes solid shadow over control units. Hong Kong. China's actual estate disaster is casting a darkening cloud over governance and economic prospects of as soon as surprisingly valued assets control groups, triggering a rout of their stocks and making investors cautious. Already battered share costs have fallen in addition 7% this month as traders have reacted to the today's times of such companies lending assist to cash-strapped developer mother and father. The capital marketplace has misplaced self-assurance in a number of the belongings management agencies, even in those agencies which have not visible misuse of price range by way of their mother and father, mentioned UBS's head of China and Hong Kong property studies, John Lam. In one of the ultra-modern instances that have unnerved investors, China Evergrande Group stated on July 22 an inner probe had determined that $2 billion of finances held by way of subsidiary Evergrande Property Services had been pledged to assure financing by the group for debt reimbursement. In the end, banks seized the cash, cleaning out a whole lot of the unit's cash. China Evergrande Group, the sector's maximum indebted belongings developer, has been at the center of China's property crisis, wherein many such organizations have defaulted due to government movements to deleverage the sector. Then on August 1, stocks in asset supervisor Jinky Smart Services Group dropped 37% after it mentioned it would lend as much as $222.3 million to parent Jinky Property. As the crisis evolved remaining year, some belongings management gadgets issued and sold stocks to elevate finances that have been passed lower back to mother and father. Also, asset supervisor Shimao Services Holdings bought a business from developer determined Shimao Group at an strangely high rate. Such doings have not pleased investors. Since mid-2021, valuations for management subsidiaries of distressed builders have plunged from a peak of 25 instances income to simply 5 to 6 instances, consistent with Lam, who introduced that the ones still above this stage should come underneath downward stress. Falls hold. Since the declaration through Jinky Smart Services, the Hang Seng subindex that tracks principal mainland belongings control companies has misplaced 7%, while the broader Hang Seng index is down less than 1%. Reliance on parents. William Sheck, the chief distribution officer of Zeal Asset Management Limited, a Hong Kong-based hedge fund manager, said his corporation had grew to become cautious in this area because the start of the belongings disaster. Subsidiaries are not likely to be protected against dangers if their determined organizations get into hassle, Sheck mentioned. Another concern is the dependability of property managers' income. Since so much in their business enterprise changed into imparting management offerings to dad and mom, revenue was restrained through how plenty mother and father could or may want to pay, senior executives of builders informed. Analysts stated assets management corporations had published a surge in impairment provisions for receivables in the second half of last year. The fashion is anticipated to worsen in outcomes for the primary half of 2022, whilst greater developers had been strolling out of coins. Analysts are much less concerned approximately devices of state-owned builders, that have excellent liquidity positions and are situated to strict governance requirements. But state-owned China Resources Mixed Lifestyle Services changed into centered past due remaining month through GMT research, which expected as a minimum 55% of the organization's profits got here from related parties, along with parent China Resource Land. GMT stated the property services unit was trading at 31 instances expected earnings for 2022, but China Resources Land could have little incentive to guide its profitability. China Resources Mixed Lifestyle Services said in an emailed response to that its service pricing become obvious and affordable. Its market-leading valuation became pushed by means of its marketplace improvement functionality, amongst different matters, it added. $1 equals 134.7300 yen.